Let's talk about Nokia, a name you know, but not for the reason you think. Sure, they made that indestructible brick phone, but today, Nokia is a global force in telecommunications infrastructure. They've left the consumer phone business behind and now build the backbone of our digital world. Think 5G networks, fiber optics, and more. Despite this, Nokia's stock trades under $4, a shockingly low price for such a critical company. This isn't a startup, it's a legacy giant with a massive patent portfolio and global reach. The market is missing Nokia's transformation. After losing the smartphone war, they doubled down on network technology. They're not the car, you can think of them as the highways, bridges and tunnels every car needs. The big question, could this sub-$4 stock really reach $64 per share? That's a 1,500% gain. It sounds wild, but let's break down the news, data and strategy that could make it possible. We'll look at contracts, innovation, and the competitive landscape. Stick with me. By the end, you'll see why this isn't just a pipe dream. Let's dive in. What's driving Nokia's momentum? Major contracts and cutting-edge tech. In 2025, Nokia landed billion-dollar 5G deals with Deutsche Telekom in Germany and a major carrier in India, locking in years of revenue. Their Bell Labs division is pushing boundaries, recently announcing breakthroughs in sub-terahertz radio for future 6G networks. Nokia isn't just catching up, they're defining the next generation of connectivity. Their R&D leadership means a powerful patent portfolio and long-term licensing revenue. They're also expanding into enterprise and industrial sectors, building private 5G networks for automated factories, smart ports, and logistics giants. This opens up a massive new market, projected to be worth hundreds of billions. Under CEO Pekka Lundmark, Nokia has streamlined operations, focusing on high-growth, high-profit areas. Profit margins are improving, and the company is leaner and more agile than ever. This isn't the old Nokia, it's a focused, innovative leader. The market is starting to notice. Let's look at the numbers. Nokia's stock has been building a solid base with strong institutional buying, a bullish sign. The company is fundamentally undervalued, trading at a price-to-sales ratio of just 0.8, compared to tech peers at 5 or higher. Their balance sheet is strong, with healthy cash and manageable debt, giving them room to invest in growth. The network infrastructure division is growing at double digits, Nokia's highest margin business. As global data demand explodes, Nokia's role becomes even more critical. Analyst upgrades are rolling in, with price targets rising to $6, $8. It's a far cry from $64, but it signals Wall Street is waking up. These upgrades can spark new interest in buying. The story is shifting from forgotten phone maker to essential 5G leader. Nokia's main rival is Ericsson, but Nokia is pulling ahead in key areas like network slicing and Open RAN. Their tech is more advanced and flexible, making them the preferred choice for many operators. With Huawei sidelined by security bans, Nokia is filling a massive market gap, especially in Europe and North America. Their Finnish roots and transparency make them a trusted alternative. Compared to Ericsson, Nokia trades at a much lower valuation despite arguably better growth prospects. This valuation gap suggests Nokia is significantly mispriced. As they execute and deliver results, that gap could close, meaning big upside. Investors are starting to see Nokia as more than a telecom vendor. They're a pillar of the digital economy. You can't have AI or the metaverse without the networks Nokia builds. As perceptions shift, Nokia's valuation could rise dramatically. The opportunity is huge. How does Nokia get from under $4 to $64? It's all about a shift in how the market values them. Right now they're priced like an old industrial company, not a high-growth tech leader. As Nokia wins more contracts and expands into enterprise, revenue could double in the next few years. That alone could justify a doubling of the stock price. The real leap comes from investors valuing Nokia like a true tech company, a price-to-sales ratio of 4 or higher. With $50 billion in revenue and a higher multiple, the stock could hit $35. Add in their patent portfolio, 6G leadership, and dominance in private networks, and a premium multiple isn't out of reach. At a 6.5 multiple, the math gets you close to $64 per share. It's an optimistic but plausible bull case. That's why Nokia could be one of the decade's greatest investment opportunities.